They make money off regulatory credits, so this business is broken. Hey, I'm MartiniRita. I invest for a living and I live in Airbnbs. We're here in Texas. I'm finally doing a morning recording, and we are going to talk today about Tesla earnings. So we've got Q3 Tesla earnings, and it is a blowout, okay? I'm so excited. You guys have no idea. Just so you understand my mental state, I've been arguing about Tesla for years, and to see them really just have a blowout quarter, start to really go mainstream. The production levels are really huge out of Shanghai, and it's just incredible. So rather than jump into the financials, let me tell you about what I think is going on inside Elon's head and the strategy that they're going to entail, okay? He said the statement, "We lack affordability, so over time, we will reduce prices and increase volume. We have improved margins, even in the face of lowered prices." So if you think about passenger cars, right, the average selling price is $20,000 in the US. They announced, if you remember Battery Day, they announced a $25,000 model. So my suspicion is that they're really trying to ramp up production. They really want to go mainstream. And they also mentioned, well, Elon also mentioned that he wants to be 1% of all output of vehicles globally. So it's going to be a really exciting time. They're thinking by 2030 they're going to have 20 million annually in output. They're at 500,000 right now. They think they can get to 1 million in a year, and that's 20 million by 2030. It's really ambitious. So why is growth so important when you're analyzing a company? It's because it determines the price that you pay. Look, the only reason that you pay for a company is for the future cash flow. So if you think it's going to grow more, that's going to change the price that you're willing to pay today. If you're only going to get $1 next year, you're not going to pay very much for that. But if you're going to get $100 next year, you're going to pay a lot more for that. And the way valuation goes is it's almost like 10 years out. So you have to think about it in terms of what's going to come out every year. And Tesla isn't just a car company, so you also have to think about the other divisions. So let's go over the earnings now that you understand that. Think about the flow from quarter to quarter, okay? So this is the shareholder letter. We haven't actually gotten the filings, but they've given us kind of a summary, so let's look over it. Profitability. We're 5 quarters of sequential profitable growth. 331 million in GAAP net income. I don't look at non-GAAP because it's not a standardized way to look at from company to company. If you don't know what GAAP is, that's generally accepted accounting principles. So it's kind of a standard that in the US, all these companies use. The first step of FSD beta rollout started in October 2020. It was actually Tuesday. So that's going to be a separate video. $6 billion increase in our cash and cash equivalents in Q3 to $14.5 billion. So we're in the middle of a recession, right? Balance sheets need to be cash heavy for what's coming. I'm really excited to see that. Let's go down to quarter by quarter. 8.7 billion in total revenues. Look at this. The gross margin increased. Look at this upward slope. Now, if you remember Battery Day, they talked about how they want to vertically integrate batteries so that way they can save more money. In essence, that's its margin, right? So if they can do this, that means that they can really mass market their car. They can bring down that price. that they sell it to you for, right? Because not everybody can afford a $40,000 car. And I know they say that you can get a Model 3 for $30,000, but what a lot of people don't understand is to get that low price, you have to kind of call in. It's kind of a pain. So most people get it with a lot of features, so it increases the price. So earnings per share, diluted GAAP, 0.27 per share. Look at this monster free cash flow, 1.4 billion. That's nice. So that means they can self-fund. That's great. So it's always good to have positive free cash flow because that means they don't have to come back to the capital market and raise more money. They still can. It doesn't mean that a company won't do that, but it's a good sign. I mean, I absolutely, totally crazy. Total revenue grew 39% year over year in Q3. Okay, this is super important because this is the growth number that you would plug into evaluation. Not exactly that. Obviously, there's a little bit more that goes into it, but this is what you're looking at. You don't really evaluate a company quarter to quarter. You think year to year. So we talked about profitability, cash. And look at the production numbers. 145,000 for S, X, 3, and Y. Sexy. Solar deployed. Storage deployed. Almost 1 billion. Almost 1 billion in services and mobile service. So it's not just about cars. Remember that, okay? So let's look at the total capacity for each gigafactory. And actually, it's a terafactory for Texas. So if we're going to need to get to the $1 million number, they're going to really need to ramp this production. So if they're about 500,000 now, that means they would need this other line in Shanghai, maybe 250,000. I don't know those numbers, but let's assume it's the Shanghai numbers and not the Fremont location because that's a little older, right? A little bit more mature production. You could get to the millions. That's 750,000, another 250,000, another 250,000. They could get to the million by next year. I mean, it seems possible. That's what they said. Remember, those are forward-looking statements, not necessarily going to happen, but it's really interesting to see where they're going. Now, if you don't know about Tesla, they achieve kind of crazy things, right? So the Shanghai factory actually completed construction in, I think, 11 months. Ask anybody that you know about building construction. Maybe you know somebody. Ask them if 11 months is typical for a factory running 500,000 cars. I mean, or 250,000 cars because it would be Shanghai. Just absolutely incredible. Absolutely incredible. So they rolled out the beta of FSD. I really want to go look around Twitter and see what they've got. So I actually want to take a moment and go back and show you something and explain kind of a talking point that the mainstream media is talking about. So what's really important to understand about Tesla is that more than being an automotive brand, they are an energy company. And so they have to deal with government subsidies in the form of regulatory credits. What is a regulatory credit? A regulatory credit is a subsidy that the government gives you, but they're very special in this case. So the government wants to encourage electric vehicles. We all can see benefits of it. And they give an allotment to every manufacturer. If this manufacturer doesn't make enough, doesn't sell enough, then what happens is that manufacturer has to purchase it from someone who actually sold in excess of their allotment. So I think Fiat, which is Fiat Chrysler, has to pay 1.4, it was estimating that they're going to have to pay 1.4 billion next year to Tesla. Crazy, right? So what you have to understand is if you invest in the energy company, subsidies are just a part of the industry. It's not something that's like, oh, well, they make money off regulatory credits, so this business is broken. You're just kind of saying like what the industry is. That's I don't know. It just seems like you're not doing your homework. And fossil fuels get more subsidies than alternative energy. So I don't know. It just seems disingenuous. But it is something that you should look at. I mean, it's not to say you should totally ignore it. But it's still only 397. So if you subtract that from, let me see. If you subtract that from the net income, 331, they would not be profitable for this quarter. Okay, so now let's review the earnings call. So there's a Q&A portion after every Tesla call. And what's really neat and different about Tesla is that there's a retail investor portion, and then there's a analyst portion, Wall Street analysts. The retail section went first, and they had some really interesting questions. But the ones that I want to point out is someone had asked, I think an analyst had asked, you think Elon has encouraged us to think about Tesla as a conglomerate of startups, with each one providing a very different kind of business. And it's, I think for the most part, true. You have energy generation, you have energy storage, and you have the automotive section, you have services. So each one provides a different kind of product. So services would be the full self-driving, fixing the cars. It even includes Tesla car insurance. It's only available in California, though. So we'll see what happens with the rollout. Energy generation is solar panels, retrofit panels, and solar roof. Obviously, you sell the cars. We have not only passenger vehicles, but commercial with semi. Obviously, it's planned. So the question was, out of all these startups, which do you think eventually will provide the most revenue? And to me, it was a very surprising answer. He said the insurance business. He even said it was 30 to 40%. So if you think about growth and if you think about revenue, that's a big deal. So I need to research much more about the insurance, but I still think that Tesla has an edge on other insurance companies because of all the data they're collecting on you. They know exactly how you're driving. They know exactly the conditions that are around the vehicle. So I think their pricing of you being a risk to them and paying out money to cover you and your liabilities, I think they'll be able to price that much better than traditional insurance companies. So for this next question, it was, I don't know, it made me laugh. You kind of have to understand Elon's relationship with Wall Street analysts. It's not exactly a friendly one. Sometimes it's downright hostile, all right? And frankly, sometimes I feel like he's just internally saying, fuck you. And I think it's because, Elon wants to manage the company year to year, 3 years, 5 years, 10 years. And all analysts are concerned about is what happens quarter to quarter. And I'll tell you, any business person you ask doesn't run a company quarter to quarter, let alone a massive conglomerate of people doing all sorts of shit. So he just gets really angry. I don't know that he gets angry, but I don't know. It's really ridiculous. So somebody asked about automation. They asked, if LiDAR was free, would you use it? And if you follow Tesla, he just says, He's so against using LiDAR as a sensor for self-driving. So it just, I don't know, it seems ridiculous. He says it's not smart to use it. I don't know. An actual good question that I think they asked was, what are the structural problems with other OEMs? And it was a really intelligent answer. If you buy legacy parts, you inherit legacy problems when you aren't vertically integrated. So that kind of speaks to his first principles kind of thinking. If you haven't Googled it, you should, because it's really interesting. When you have out-of-the-box thinking, the idea is to think of it from the ground up. Question everything inside that solution, that process, and that's kind of the TLDR on first principles. One last thing, I want to talk about the change in communication with shareholders. So typically there's just a ton of hype with Tesla announcements, and I get carried away. I have a lot of fun, you know. I really like Tesla. It's a really engaging brand. But lately, they've been kind of being low-key on everything. You kind of have to read between the lines and realize, oh my God, this is crazy. This is absolutely crazy. And you kind of do it to yourself instead of them hyping you up. So it's a difference in how everything is going lately. I'll have a second video on full self-driving and the release this week, but that also, that the way that release went down is showing that they're having a different approach to talking with everybody. You know, they also got rid of their PR department. I already knew this because, well, I saw journalists complaining about it, but I guess it's a thing now. Anyways, I just think they're going through a lot of changes, and it's really exciting to see. So that's it for earnings. If you want to follow the channel, please subscribe. The place to be is the Discord. All right, we get in there. We do a lot of due diligence. You can also follow me on Twitter for updates. So that's it for Tesla earnings. It was such a blowout quarter, literally the best quarter that I've ever had. I'm so excited to see what else is going to happen. So I'll see you guys.